Good evening. Good evening, everyone. And welcome to the third occasion that I'm hosting a webinar for the ladies in our community, our lives, and our world. It's important to be an advocate, a supporter, and a cheerleader for women in general, and also on an individual basis to women in particular. And it's also a critical part of my practice to help women, whether they are my clients in a singular fashion or as part of a family unit. And the reason I so passionately do these webinars is because it has been my observation that the industry has ignored, overlooked, and misunderstood certain segments of our communities. And rather than simply complain and just point fingers, I decided to do the little that I could, which is to share, educate, and engage these groups. Some of my best and most treasured clients are women who value trust, honesty, and integrity above a hot stock pick. And I think they make the best clients and investors. So for various reasons, it really resonated with me when I spoke to the folks at Russell Investments, and they made the statement that women are wired to invest. And it's for this reason that we're here tonight, and this is the agenda. I will provide just a brief introduction to who I am for individuals who will join us for the first time, and then we'll do a very short slide poll just to get a sense of who is joining us for the discussion, and then I'll hand it off to our presenter, Nancy, who will lead into the conversation. And then we'll close off with a Q&A section. And once that formal Q&A is complete, and then we bid farewell to our guest speaker, I typically hang around for an Ask Me Anything segment. So for those of you who are joining for the first time, there are some familiar names that I can see, but if anyone is joining for the first time, my name is Orlando Lopez, and I've been hosting these webinars for going on 3 years now, actually. The very first one was March of 2020. So it's 3 years to this date, really, that I'm doing webinars. Prior to that, it was in-person seminars. I've been in the industry for over 13 years as an advisor. And I also, in the past, have taught finance at a university level. So in a nutshell, I sort of engage myself in anything surrounding personal finance, in helping people navigate it, learn it, be comfortable with it, and to make informed decisions. And in my practice here, I work with individuals or families on that journey, on their financial journey. Now, I do want to point out that although we try to simplify life and data with aggregation by grouping, that we also acknowledge that no two women are the same. You all come with unique life, personal, and career experiences, which result in different outlooks, values, and priorities. So the questions that we ask, or the statements and information that we might share, is not to put you in boxes. There might be certain commonalities that might be interesting or important to point out as observations which might lead to a richer conversation when you and I, for example, may meet on a one-on-one basis for a more in-depth discussion about your circumstances, whether later this week or next month. So before I hand it over to our guest speaker, as I mentioned, I always want to find it helpful just to gauge a room, and some of this will be of help just for her to understand the different individuals that we have present. So you can use your phone to scan that QR code, or you can go to the website, slido.com, and input 4019620. And let's start with the first question. Okay. So our first question, 1 second, there we go. Okay, what life stage are you currently in? So are you currently in your 20s or 30s, 40s or 50s, 60s or 70s, or in your 80s or above? You're still coming in. Okay, and I think this will help Nancy, just in terms of knowing who is listening in. Right, so predominantly 73%, 40s and 50s. And next question is, do your parents rely on you for support, help, advice, or some sort of care? Got some, this one is flipping back and forth. 42% yes, followed by not yet. So you probably see it sort of on the horizon, around the corner, around the bend. Right. Do you have dependent children? I know the word dependent is no longer a specific age anymore, no longer a dead stop 18. And we don't have that question, but I mean, pretty interesting if there's some that might be in both. That might be yes, dependent children, and also supporting parents that depend on them. Okay, so majority do. And out of curiosity, what would you say is your relationship status? Single, in a relationship, widowed, or other? I like to say, it's single. It's, can be by choice or circumstance. So predominantly married / common law. 70%, almost like the first question. Wonderful. And last one, do you work full-time in a company or your own business? And I did indicate, because there are circumstances I've come across where individuals are doing both. Probably in transition, starting their own business, getting it off the ground before then sort of launching it. A good chunk full-time. See, you've got 4%, actually 13%, both employee and a business owner at the same time. Okay. Right, wonderful. That was eye-opening for me, and I'm sure it was for Nancy as well. And at this point, I want to extend a huge welcome to Nancy, who was very gracious to fill in for Tina Downing, who was not able to join us this evening as planned. Nancy comes with a lot of experience from a career that spans Merrill Lynch in New York, UBS in various roles, and then VP at Prudential, and now as a senior director at Russell Investments. So it's quite obvious from her resume that she's had a successful career and not only knows this topic from theoretical sense, but likely some life experience navigating Wall Street will be valuable. So without further ado, Nancy, welcome, and let me hand you the control. There you go. You should see it right now.
Great. Thank you, Orlando. It's a pleasure. Thank you so much for joining us today. We are excited. I'm going to go ahead and share my screen and get started on really the introduction for this evening's discussion. I thought that poll was fascinating. It certainly gives me a great insight as to who has joined us. So welcome everyone that has taken time out of their evenings to be with us. As Orlando shared, my name is Nancy Fahmy, and I'm a senior director with Russell Investments. It's an absolute pleasure to be with all of you, especially for those of you that are female and women. I can't see exactly who's dialed in, but this topic in particular is near and dear to me, not only as a female working in the financial services industry, which tends to be male-oriented, male-dominated, but as a daughter, as a sister-in-law, as a mother to twin 9-year-old daughters. This conversation is absolutely relevant in my life on a day-to-day basis. And this topic really brings me joy because it's all about empowering females and taking control of a major topic that really drives so much of our lives. The reality of it is that the world is changing, and women will have and continue to have more power and control than ever before. And this presentation really sets out to explore this opportunity that's represented by the female investor, and how these financial conversations and potentially areas that we need to focus on and shine a spotlight on. Because at some point, we see in our research here at Russell Investments, there's going to be a need for all of us women to assume full control of our financial affairs. Sometimes later in life, right, as the result of becoming single through the death of a spouse or maybe a divorce later in life. So this presentation is really about getting to that other 50% of the population to really harness the financial power that you have through investing, whether you're the breadwinner, the homemaker, the ones that are looking after your family, caring for sick relatives, elderly parents or relatives, managing the purse strings for your family, or teaching your next generation about money. We're going to examine some of the key areas that we have to be aware of: living longer, earning less, the penalties that we assume for taking time out of the workforce because of our priorities and competing priorities. And we have to be able to really take control and understanding that the decisions we make, the choices we make, really do have an impact. So my hope, my goal, Orlando, is for us to really come away from a place of feeling more confident, to evoke a feeling of maybe even sisterhood amongst ourselves, to allow us to feel more comfortable and confident in talking about these topics, not only with ourselves, but with other members of our family, and extending that conversation to other women in our lives, right? My hope is that by the end of this session, you're going to feel a lot more equipped to join, to influence, to guide, and to steer money conversations, not only for yourself, but for everyone around you in your life. So with that, let's get started. So I've got 4 things that I'm going to be talking through today. The agenda really is to really kind of celebrate, one, how women have been able to really get through the stages of lots of accolades and phenomenal milestones in the history. But I would say that we still have a path to really sort of, to grow and to continue to pave. Next, I'm going to spend some time really setting the record straight and busting what I consider to be persistent myths when it comes to women and investing. This is frankly my favorite part of the discussion. Not only am I going to share why those things are not the case in terms of those myths, but why women are in particular very good and natural investors. We are equipped to be great investors, and we have great intuition about investing. We have a savvy that maybe we didn't even really realize is within us. So oftentimes I like spending time on this area because we have to sort of get out of that own self-negative talk that we even have in our own minds. I know as an industry, I do believe, as Orlando mentioned, we are underserving female investors, and that's part of why you're here today. So we'll talk about that. And then we're going to spend some time talking about what the differences are for women and men. There are differences. We're going to have to talk about some of the wealth implications for living longer, for earning less, for taking priorities away from our earning years, and how that will absolutely impact our outcomes. And then, of course, last but not least, is really setting together an action plan, whatever that is for you, however personalized and customized that is, knowing that you've even started the journey by even dialing in today. I give you a lot of credit, and I commend you for doing that. So let's talk about the 100 years of women's rights here in Canada, right? We've come a long way, especially when it comes to personally and professionally, financially. We are still doing the work, the hard work that goes forward. And we continue to have to want to do that to really level some of the playing field. But let's face it, women were not too long ago not able to, they had to sort of be married in order to assume full financial security, right? Women were essentially starting, I think it was in Ontario in 1884, Married Women's Property Act gave married women in provinces, certain provinces within Canada, the same legal rights as men, starting as early as 1884. So that was a milestone. We also talk about women being able to practice law. In fact, Clara Brett Martin, she's the person, was the first female to actually practice law in Canada in I think it was 1897. We also have the right to vote. Canadian women won the right to vote in federal elections in most provinces in 1918. I think in Quebec, it wasn't until 1940. We talk about in 1951, the Equal Pay for Equal Work Act was enabled. So women were actually essentially were designed to have equal pay for the same amount of work. And the rest of the Canadian provinces were also quickly following that lead. And then it leads us to 1964. Women really had to sort of battle this, but they were finally able to open their own bank account without their husband's signature, not until 1964. So that doesn't seem so far away, right? So the bottom line is, right, we've come a long way personally and professionally with media coverage and social momentum around women's empowerment, equality, right? We know that we still have a lane to forge going forward, but let's all take a moment and just reflect on some of the wonderful accolades and milestones that women have had in the world today. But let's talk about this growing economy. This is the reality, is that women are absolutely becoming an increasing part of the financial decision-making process in their families. And it's mainly due to three big reasons. Women are becoming much, much more educated. They are absolutely taking more in work and vocation than ever before. And they have choice when it comes to marriage. So we'll take each of these in sort of distinct one by one. So let's think about education and where women have come. Younger women in Canada, ages 25 to 34, are more likely to attain a tertiary educational degree. Actually, 70% compared that to 53% of men. Just over a third of Canadian women actually have university level education. Compare that to only 29% of men. So we know that more women are graduating and getting those upper end of degrees. And when it comes to vocation, it's not all that different, right? So senior leadership is being represented by female. We saw that globally companies are now growing the number of females in their C-suite or executive suite, if you will. So 29% will have at least one female in their C-suite, which is up according to lots of the research we looked at. 87% of global kind of mid-sized companies have at least one in their senior leadership roles. And we see that, more and more women are becoming the breadwinners for their families. This is actually becoming a phenomenal thing to talk about, right? Couples with female breadwinners have now quadrupled from 8% back in 1976 to over 31%. And that was only about a decade ago. So the numbers obviously need to be updated, but great numbers to showcase there. Let's talk about marital status. I want you to think about your grandmother. I want you to think about your mother, depending on how old you are. Think about what they felt, how they made decisions back 40, 50, 60 years ago. Many women in our lives felt that they needed to get married in order to sort of feel financially secure. This is the reality. I certainly was for my grandmother. So I know that nowadays, and we all know nowadays, women have choices. Whether they choose to never get married, remain single, whether they choose to initiate divorce. Yes, half of all marriages still end in divorce, but the larger percentage of people initiating the divorce is actually women, not men. Women are choosing to not legally get married, so they may have a significant partner, but not necessarily make it legal, right? And increasingly, women are, just choosing to sort of have a diverse background in terms of who they marry and for what time of in their life they do that. So women have an absolute growing impact on the economy, and the financial service industry should really not bucket women with one voice, with one body. And that's, I love, Orlando, the way you started the conversation, because that's exactly right. I know how important it is for my organization at Russell Investments to really represent the many voices of women in the diverse backgrounds and choices that they have. So whether we are at different places in our own lives, whether it's the different places of our life journeys, our educational, our employment backgrounds, our marital status backgrounds, these are all key differentiators in the lives of women that really drive our financial priorities and why we need to really sort of take control. So that is going to be even more important as we start to think about women becoming the face of growth and wealth in the industry. Now, this number was shocking when we did the research. First and foremost, women are already controlling about $2.2 trillion of personal wealth in Canada. But here's the statistic that I think blew me away. By 2028, that number is going to more than double, to the tune of $4 trillion, not billion, trillion dollars. By 2028, 42% of Canadian personal wealth will be controlled by women. I want you to think about that, right? In the next decade, large sums of money are expected to change hands. And the biggest driver of that shift is demographics, right?
That's 5 years from now.
Today, right, Orlando, 70% of Canadian affluent households are controlled by who? By the boomers, right? The baby boomer. And 2/3 of baby boomer assets are going to then sort of get passed down to the next generation decision makers. But in between that will be the female spouse, the surviving female spouse. And that's because women on average will outlive their male counterparts between 4 and 5 years. This is remarkable. I'm not sure if you had something to add, Orlando, but I'll take a pause here.
No, I mean, that's not far from now. I mean, we're 2023. I always sort of say the days go by slowly, but the years go by quickly. So it's 2028 will be here just like that.
That's right.
And there's one other thing I wanted to add that stuck out. The first slide that you showed that said 1884, the sort of Marriage Property Act. It made me think about some other data point I saw recently that stated currently single women are actually more involved in investing in real estate than single men. And so there's a lot of interesting sort of shifts taking place. And then, I kind of look at, oh, wow, 1884. And now, look where we are right now. So,
absolutely. And that data is supportive of everything we've done research on. But this in particular, this wave of wealth, I call it a wave of wealth that is going to be happening in the next decade as men cede control of assets and household wealth to their surviving spouse. And women are expected to control much of this this gigantic swath of money that's going to be changing hands. So this wealth transfer, I'm calling it the greatest generational transfer of wealth in the history of our country, right? And that's really going to be the case. So as this generational wealth takes place, women are going to be taking control, and there's still yet misperceptions that women have, or people have, of women when it comes to investing. So let's take some time to really talk about what feels maybe uncomfortable. Maybe it's just a negative thought, but something we have to discuss, which are some of the common myths. I hear this all the time in my day-to-day, and maybe even if you're not in the financial services industry, you might be hearing this in your day-to-day conversations, right? Women just don't care about investing. They spend money irresponsibly. They don't take enough risk. They're not risk takers by nature. And women just they don't make strong investors, right? And so despite all the advances that I just covered, it's really important that we turn our attention to the fact that women do have some insecurities even in themselves. And I think this is not only for us to debunk for the industry, but we have to debunk this in our own minds, right? So let's walk through each of these. Now, I think the first one that talks about the fact that women don't care about investing or that we spend money irresponsibly, I personally think this comes from a division of household responsibilities. Something as simple as that, right? It assumes that women have zero planning or role when it comes to financial decisions, and that's simply not the case. Women actually have substantial responsibility for family finances. And as this probably won't surprise any of us, but women are the largest consumers in the world. We are the largest consumer group in the world. We are responsible for 85% of all purchases, whether it's groceries or clothing or child's education or activities or making charity donations, right? Women contribute trillions of dollars to the Canadian and US economies. And so we know that women are making decisions. In fact, that's probably where a lot of this comes from, is they spend too much money. Well, they're doing it for their families, right? By the way, men spend a lot of money also. In fact, if not the same, they just tend to do it on different things, on, no surprise, right? Technology and hobbies and vacations. So that's where we find that myth maybe lies, in that sort of household division of responsibilities. But I will say, when it comes to investing, although women do tend to look at sort of setting money aside, I will say all of the data we looked at did show us that men actually did spend, or I should say save on average, or spend more time on average, setting money alongside for the long term. They absolutely did invest in the stock markets with more assets, and they did take more risk. So there is something there that we need to dissect a bit, right? Could it just be that women are, basically spending a lot of time in terms of the priorities that they think are important to them? That's them and their families. It could be that there's a confidence issue here. We're going to talk about that in just a minute. But I do want to mention that men and women spend just as much as money. It's just different based on priorities. That's the bottom line. Okay. Let's talk about another common myth around women don't take risk, right? They're risk averse. How many times have we thought that, heard that? People have maybe made that impression on us. That's not the case. I want to make the difference between risk aversion, avoidance of risk, and risk awareness. Key difference, right? That's where that misperception lies. It's more that women want to be aware and conscious of the risks that we take. And frankly, we want to get paid and compensated for taking it. Okay. So when we looked at the research here, right, we actually found 87% of women said if they believed the risk was worth taking the chance with higher returns, they'll take it. If they thought that they actually said, I can adapt to changing markets and changing investment outcomes because I want to be able to sort of, be nimble and be flexible. And that's okay. That means taking risk. And women that are higher earners, $200,000 or larger, are actually willing to take significant risk on, right? So I think about this personally, Orlando. I think of myself, maybe you can even apply this to yourself. I do it every day, right? Every day that I'm thinking about something, before I do it, I think about the inherent risks before I buy something, before I do something. I want to know, what are the larger ramifications in taking that risk on? What are the long-term implications? And that's not really different for my finances as well, right? I think of that more than just the things that I'm purchasing, but I think about that in my everyday life as well as investing. So if I'm a conservative person when it comes to financial decision, then we also have to remember that that can also have implications. So we have to know the difference between being careful and being risk aware, right? Mm-hmm. But being overly cautious can really start to mitigate some of our outcomes, because let's face it, there is no free lunch in Wall Street. Have we all heard that saying before? In order for us to get the maximum returns of the markets, we have to take risk, right? So this is an area that I think requires us to sort of understand the nuance. But for one, women just want to make sure they're aware of it and they understand it.
So Nancy, to piggyback on that, does it also mean that if the industry and if practitioners are not taking the time to help female clients understand and appreciate the risk in option A, option B, then that could be the crux or the barrier in that individual moving forward. If the assumption from the industry is sort of, just go with it, take risk for the sake of taking risk without investing that time, then that could also be part of the issue.
Absolutely. I think the pendulum swings on two sides. We can either throw caution to the wind and just invest without really looking at a risk budget, if you will, or if we're too conservative, right, in our financial decision making, it's going to mean that we're not going to accomplish our longer term objectives, right? We all have something to fight, and that's called inflation, right? $1 today is worth less than $1 tomorrow. It just is. So in order for us to comfortably beat inflation, we have to take the appropriate amount of risk. And I think that's where the value of working with a financial professional to help understand what that might look like, what that is needed to do, right? So the impact will have a far greater impact if we don't assume things like the mathematics of return, that money makes money over time, that inflation eats away at our purchasing power every single day. So we have to be conscious of that fine line between taking risk and taking the appropriate amount of risk. Absolutely. Last but not least is this idea that women just don't make strong investors. And frankly, I love to debunk this. I love sharing this with my daughters. There's lots and lots of studies that tell us that women do three things in particular, really well. We tend to take a longer term view, which is great when it comes to the capital markets. We tend to do our research, which we just talked about. And that means we ultimately tend to trade less. And there is a correlation, surprise, surprise, to these three things. Think about what happens when somebody in our life, a male maybe, has overconfident behavior. Now, by the way, there are over 200 behavioral biases that investors can fall a trap into, fall victim to, right? There's a whole topic around behavioral finance and why people use emotion when they invest, right? Even though the evidence is there and even though all the facts tell us to do something rationally, right? But when we see men fall into these overconfident traps, they think they know information or they have information that's new, that's different, and then they want to act on that information, right? Whether they heard about a stock tip or they heard about an investment, whether it's crypto or whatever it might be, right? This was a study that was conducted out of the UK that said that men will trade on average 13 times relative to only women trading 9 times in a year. That difference of 4 times more that men do, it actually impacted negatively their investment returns, their investment outcomes. In fact, men underperformed women by almost 100, in this case, 1.8%, or 180 basis points. So it's not that women are not good investors. In fact, we're very good investors, right? Men end up paying way more in brokerage fees and commissions. They pay more in taxes when they sell things at a profit. They run the risk of maybe not making the right investment choice. So the risk of making the wrong choice, right? It is again, that overconfident behavior that sort of leads them to that direction. And so because of these reasons, women tend to trade a lot less. And because of that, we have better outcomes. So I love this study because now I can show the proof behind the pudding, right? We know that qualitatively, we like to research, think about every time we buy something. We go on Amazon, we look at the reviews. I don't make a decision without talking to friends, asking. I call it the word of mouth effect. So I know I do these things qualitatively, but the quantitative data supports it.
I think it's also inefficient. Not only there's the time that, then the energy and all of that trading, and that will take away from other things. Maybe the men are doing so much trading, taking time away from their family, probably even costing them some sleep.
Yeah.
Which is some unwritten cost.
Yeah. You know,
But
it's not that, it's funny you say that. Women don't just invest differently from men, they also think about investments differently, right? A lot of experts will say that men tend to turn investing into a competition, and they focus on, their performance and the value of the performance, swapping one stock for another and trading in and out, whereas women tend to be a lot more focused on the long term, right? How is this going to help fill in the blank, right? Whatever goal that they want, whatever outcome they're trying to achieve for themselves, for their families. I don't want to be a burden to my children. I want to live in retirement with dignity, right? Those are the things that I hear. Again, it's not to say women are better and men are not. It's just to give you a sense of how differently we tend to think about things. And yet, I will say, Orlando, in all of my research, women still have regrets, especially when it comes to finances. Maybe it's that inner perfectionist in all of us. I know I'm notorious for being that perfectionist. I know that in working with a lot of women investors, I see this often, right? According to this research, 41% of women said they wish they had invested more money. They wish they would have chosen a higher career, a higher paying career. 34% said they wish they wouldn't have taken as much credit card debt, especially in their younger years. And then 32% said they wish they lived within their means, right? I know in the world of TikTok and Instagram and Twitter and Reddit, it is very easy for us to live a life that maybe isn't commensurate to what it is in terms of what we earn. I mean, I can't tell you how many times I've bought something that I had no business buying, or I was influenced to doing something or buying something, even though I didn't budget for it, right? So we all have that, right? But I think it's exasperated now, especially with social media, living within our means. Is it a want or is it a need? Those are the things that women tend to regret later in life, after they've gone through and have realized that I no longer have time on my side, right? And we're going to talk about, the fact that there's only one magic area of finance that we can really tap into, and that's the power of compounding, right? There's not many things we can be sure of when it comes to the stock market or the bond market or the capital markets, but compounding and investing sooner and earlier is really magical. So I just talk about these financial regrets because, when I think about why women defer decision making, there's lots of reasons for it, and we have to plan for it. So despite all the things that we talked about, I want to turn our attention to the unique financial challenges that women face, simply because of the circumstances that we operate in. And this is a harsh reality. I think this is the part of the presentation. I don't want to scare anyone, but I certainly want to light a little bit of a fire under folks that dialed in to say, wow, I guess I didn't realize that, and I need to do something about it. So let's face it, women do face unique financial retirement planning challenges. I think this is precisely why you decided to have today's event, right? Is to really put a spotlight on this, to really shine a light on the areas that you want women to be more educated around. And they are: we are living longer, we are earning less proportionately, we have priority decisions that take us away. It's a priorities gap, I'm going to call it, and a confidence gap. Women are still deferring financial decisions. If they can, they will defer. And study after study tells us that even the most educated of women will defer. So let's tackle each of these in its own right because they're each really important. Let's start with longevity. I think for women, this is a phenomenal human aspect. I think it's great with health and medicine advancing. We get to live longer and say that we're going to be able to be there for our grandchildren's milestones. I think that's a phenomenal human aspect. However, that has major consequences. And that means having to stretch our nest egg even longer, right? So let's get some stats here. In the country, there are exactly 105 boys born for every 100 girls. This is a statistic that we've been reading about and have looked at. But at some point in the country, that ratio starts to shift in the population. So as we see, women, in this is by 2022, 54% of the population is female. So you're saying, why is that, right? More boys are born over girls. Now, it could be that men and boys take more risk and they jump out of planes or, climbing mountains and women aren't. I don't know if that's what it is. It could just be how they live their life. But here's the reality. Women on average will outlive men by 4 to 5 years. That statistic hasn't changed in many years. 77% of women that are widowed, 77% of people that are widowed are female, right? So chances are you will outlive your spouse if you're a woman. 81% of centenarians are women. If you ever go into a long-term health facility and you walk into the lobby, you walk into the social area, you walk into the cafeteria, you're going to see more women than there are men. That's just the reality, right? So
and Nancy,
go ahead, Orlando.
I'll add to that. I think separate from the lifespan gap of women outliving men, I think it also gets compounded just because of the typical dating average gap, that usually there's a gap amongst couples and
Correct.
one being old, and it's usually the male being older. A few times it's the other way around or same age. So even that alone, even if they live to be the same age, up till the same age, the fact that there's usually a gap, a 5-year difference, or whatever that age difference, also adds to that piece too. Great
point. It's a great point. So, so much of that statistic, I guess, is put into the census, and they figure that out. You're right. So longevity it's an interesting phenomenon, right? It's sort of a double-edged sword, right? Happy to live longer, but now we've got to stretch the money even further, right? So we know that that's going to have an implication because you have to set more aside. Let's talk about the wage gap. This is a pesky one. Yes, women continue to be plagued by the statistic that for every $1 a man makes, a woman in a similar position earns 89 cents. Okay, it actually used to be 82, so it's gone up. That's a good thing. That's a very good thing. I know women of color and have greater disparities, so I think that number even is less for African American and Latina women. We also know that women will on average have work disruptions in their life, interruptions or disruptions, we'll call them. And 44% of women will spend time out of the workforce. Compare that to only 28% for men. Now, whether you want to call it the good motherhood penalty, the good child care penalty, or the good daughter and spouse penalty, right? The reality of it is that will have an impact. And over a lifetime, we're talking about $1,055,000 of lifetime gap in retirement in terms of assets that a woman will have relative to a male counterpart. So think about that. How many women in your own life, maybe even yourself, had to make a difficult decision to step out of the workforce to care for children, to care for an elderly parent, to care for a spouse, because childcare is so incredibly expensive nowadays. And so when you start weighing out the differences between staying home relative to childcare, the pandemic really exacerbated this in big levels, where the division of household responsibilities clearly went down to the female, where she felt the necessary need to take time out of the workforce in order to be home, right? Because so many children were being homeschooled, so many things were shut down and closed. So by the time a woman reaches her retirement age, she will have earned a cumulative, over $1 million less than a man who stayed continuously in the workforce. That's something we have to contend with. Let's talk about the confidence gap. This is an area that I thought was intriguing when I did research. Research after research tells us that women still do not play an equal part when it comes to financial decisions in their family. We think this comes from a multitude of reasons, competing priorities being one, two being a confidence gap, especially when it comes to investing and managing money. And we think there's several factors. It could be the fact that they simply think their spouse knows more. It just comes down to they think they know more. And that's where that overconfidence bias comes from, right? Men think they're just more confident in what they know, right? It's also very stressful. 48% said, I have so many other things going on in my life. I just can't think about that. I have to pawn that off. I have to push that off to somebody else. There's the perfectionist area that I mentioned, that flaw where women don't know where to begin. It feels overwhelming. They're too afraid of making a mistake, and they don't want to feel stupid when they ask questions. By the way, even the most educated, the most compensated, the most high achieving women do not participate equally. And this was a study that was done by UBS that said nearly half of all women with advanced degrees, 46%, deferred to their spouses, and 41% of primary breadwinners deferred to their spouse. Think about that, right? Women in every industry defer, and every socioeconomic background. So this tells us that we as an industry have to do better. We have to empower women with exactly the reason why you're here today, which is simple decisions to get started, get invested, diversify, work with a financial advisor, right? And stop deferring and stop kicking the can kind of down the road.
Yeah, I was going to add that point. In my experience, if it's also sometimes a single woman, the deferral is a time deferral. So not deferring to somebody else, but deferring it till later, deferring it. So that's the deferral I see as well, which it might be, there's many other things going on that are pulling the attention away. So it's a bit of both. But I see a lot of time deferral these days, especially post-pandemic, where there was a lot of demands. Work from home meant sort of work kind of never really ended at 5. It was just constant. So that's been my observation with.
It's a great point, Orlando. And I would say probably a lot of the research was embedded with that. I think you're hitting something that's really important. It's not just deferral to somebody else. It's the deferring to doing it in the near future, right? Whereas women are more focused on the now and the here and the now. Family obligation, right? Making sure that they're keeping up with current expenses, necessities, housing, food, clothing, right? All those things that matter day to day. Whereas we saw earlier that men's top priorities tend to be on those financial goals that are further out, right? So it's interesting how that works out. But when we actually start to look at the raw data, right? When we consider some of the differences surrounding the financial decisions or financial circumstances of women versus that of men, we can see that this might turn into real life numbers. And, the number that we looked at here was for a man that's based on a lifetime level of earnings. This is an individual with a bachelor's degree. We are assuming that they are working for a 40-year period of time. Okay. We're assuming a certain base salary. They're assuming that they're saving about 10% of their income a year to invest. And we're assuming about a 7% return on investments. Okay. Those are all the assumptions. A male should be able to take out about $8,800 of income per month per year. For women, that number is going to be smaller because now they have to stretch that over, again, that average of 4 to 5 years, right? Now we have to consider the fact that there's going to be lower earnings and work-life disruptions that take them out of the workforce. So their cumulative savings will be lower, right? So they can draw less income off those savings. We saw that. And then we factor that risk awareness part where women aren't taking as much risk maybe as men are when it comes to their investments. And now we start to see that really impact because we know that over time, right? Equities are the clearest winner to grow wealth over time, right? Being in stocks, being in equities versus that of bonds or cash. So once we start factoring all of these areas, this is the reality that women are going to have different circumstances, and we have to ensure that we are involving our discussions around this, because we're going to have to plan accordingly, right? For living longer, earning less, and maybe not taking as much investment risk on. By the way, I mentioned the pandemic, and I thought it would be interesting to just give you some statistics here. I don't want to talk about this any more than I think anybody does. I think we're all done talking about the pandemic. However, I will say that it did do detriment to women. It sort of set women back even further. I think that's an unfortunate byproduct. There was a disproportionate burden on women than there were in men when it comes to not only, the amount of time and effort women were having to take outside of work to care for their families, homeschooling, cooking, cleaning, right? Men certainly still took part in things like managing the finances and other things outside the home. But also think about how many women were impacted by losing their jobs, right? 4 times as many women actually dropped out of the workforce, either because they were forced to, right? Think about all of the sectors that were affected by the service sector and the hospitality sector and things like that, but also because of voluntarily having to get out because of all those decisions that they've made for their families. But the good news is women thrive on challenges. And because of the pandemic, the one silver lining, if I could find one, and there's not many, right? It's that the pandemic has made women laser focused on what matters in their life. I think, if I could say, there's nothing like a global pandemic than to make us all focused on what we really care about, right? This is definitely the case for women. So 63% said that experience during the pandemic actually impacted how they think about money, how they think about investing. 82% said they now want to protect themselves and their families more, knowing what happened and knowing the disruption and potential loss of income and life, frankly. 64% said they actually now want to discuss finances with their spouse and partner. God forbid anything happened. I'll never forget the first month of the pandemic. I'll give you a personal story. The gentleman that has been doing our yard work for 10 years, cutting, trimming, planting, he's been a major factor in how beautiful my home looks from the outside. He passed away from the pandemic, March of 2020. And he left his wife and 3 daughters to tend to the business. And it was devastating for them, right? They knew nothing about the business. They knew nothing about running a landscaping business. They had well over 20 employees that they had to be responsible for. And so I know that had a major impact on his wife. And so that is one thing I would say the pandemic has done, is it made women realize, God, I really need to talk about this in case something ever like this ever happened again, right? 38% said I intend to discuss the inheritance plans with my children, because, no one is guaranteed tomorrow, right? None of us. So the economic fallout is one thing, but it absolutely has increased all of women's concerns. 8 in 10 want to protect themselves and their family, and we know that. So that's the one silver lining. Okay, let's talk about next steps for yourself, for maybe other women in your life, and then we're going to get to some questions. The bottom line, ladies and gentlemen, right? Whether we earn it, outlive it, divorce it, inherit it, right? Whatever that term you want to call, outliving it, marrying it, divorcing it, women are going to be assuming control of their outcomes. 90% of women at some point in our lives will be in financial control. We want 100% of us and you to be prepared to do that. So how do we start? First and foremost, we have to stop the taboo around money and investing. I think this is an area that really comes from either cultural background. I think it's based on how you grew up and what culture you grew up with. I think it absolutely plays a big factor in how you talk about money with your family. I know as a girl, a little girl, we weren't allowed to talk about money at the dinner table. It was taboo. It was considered rude to ask my mother and father about how much money they made, how much money they had, how much our home cost, right? We don't talk about those things. That's rude, right? So taboo will undermine a woman's relationship with money. It will. So we have to start the conversation, and we have to be at the forefront of changing that. So how do I start? How do I get involved? How do I start to feel more informed and less overwhelmed? How do I bring this up to my partner so it doesn't feel like I'm asking him or her about things that maybe are not in my wheelhouse, right? Well, why now? Why are you asking me now, right? I think a lot of people will get suspicious by, you never asked me before, you never showed interest in this before, right? You can say, I joined a seminar and I listened and I want to be a part of the conversation, right? So family influence, cultural influence, financial resources, financial literacy. You know, I love this statistic. 87% of women say basic financial planning and management should be an absolute standard in part of high school curriculum. I completely agree. I don't know why we have to figure out how to make a bench in our shop class in terms of making a wooden bench. I think we should be talking about our savings and our investing and how to balance a checkbook and when to start investing and the power of compounding. That's what we should be spending our time on, right? Okay, let's talk about taking the appropriate amount of risk. I think I've talked about this in nauseum. It's so important. This is the one magical part of investing. There's not many things I can say with certainty will happen, but compounding is magical. Let's just take an example. $1,000 a month with a 7% annualized return. That's about what average the market gives, okay, on average. Some years are higher, some years are lower. Over 15 years, that initial $180,000 will grow to $316,000. If we have another 10 years on our side, that now grows to $810,000 based on a $300,000 initial investment. If we have time on our side, if we're 30 years old and we look out 35 years, by the age of 65 years, that number will have grown to $1.8 million. This is the importance of starting to invest early and as soon as possible. I know a lot of people say, I don't feel like I have enough to start investing, right? It doesn't have to be $1,000. It could be $50. It could be $100 a month. But when you do that, it automatically starts to compound because of the magic of money turning into more money. So this concept is one that I consider to be one of the best ones for us to think about. Getting organized. Women often ask me, how can I get involved when it comes to making decisions, or if God forbid anything happened to my spouse? When was the last time you actually talked about where things exist? Where do our tax returns live? Do we have our checking and banking account numbers? Do we have the passwords to things? Do we know who the beneficiaries are to certain accounts? Do I have insurance? Should I have insurance? Has the beneficiary been updated since we got married, since we moved? Do we need a will? Do we need a trust, right? Where does the mortgage paper even exist, right? Where's the rental agreement? All of this has to be kept in an organized fashion. And I think having a place where all the documents live and is accessible for both you and your spouse, it's going to allow you to sleep a lot comfortably more at night. And then, of course, working with a financial advisor, right? They can absolutely help you get organized around your financial decision making. They can be your quarterback, your counselor, your advocate. We see that advisors not only help with helping you put the tenets of investing on your side, whether it's diversification and asset allocation and rebalancing your portfolio and having the right amount of risk profile, but they also do something called behavioral coaching, right? They help you when times get difficult, when things get emotional, they can coach you back off the ledge from not making those important decisions that can be detrimental to the health of our wealth. They can help absolutely put together a customized experience and a plan that's really bespoke to you and your family and your circumstances and preferences. And they can do it with an eye on lens on being tax efficient and tax smart. So with that, I'm going to leave it here by talking about whether it's your health and wellness, whether it's your career and work, whether it's your lifestyle and leisure, your family, your relationships with your family, or it's your giving and charitable giving aspirations. Every advisor wants to understand the questions that matter to you, the answers to those questions. They want to know where your priorities live. They want you to be in the driver's seat, but they sit in the passenger seat, helping you, navigating you, helping you through the windy road of life, right? And I know Orlando in particular has really stood up today's conversation and would be a phenomenal candidate for you to think about doing that with. So when we talked about the age number at the beginning of the call, right? I know there was a couple of people here that were in their 20s and 30s. Here are the types of things you'd be wanting to talk about with your financial planner or advisor. How should I maximize my savings? When should I start investing? How much? I'm only 25. Do I need insurance? Do I need a will? Right? How do taxes have an impact on my savings and my distribution? Women in our 40s and 50s, we call this the sandwich generation. Why? Because typically we have young children or children of our own, and we have elderly parents. So we're sandwiched in the middle of those priorities. We're having to make decisions on behalf of our family members. So should we have a plan around how much risk to be taking on, how much emergency money I should be having if one of my husband or I lose our incomes, right? Should I be thinking about, retirement from now? When should I start to think about that, right? Do I need a will, right? These are all questions to be thinking about. And then of course, in our 60s and 70s, as we get closer and closer to retirement, of course, we should be thinking about how much money can I afford to spend in retirement? Can I live a life that is commensurate to my income years relative to my years of not making income, right? Can I afford to travel and take the trip to Europe? Can I support my grandchildren in a tax efficient manner? So the bottom line is knowledge is power, right? Knowing that what matters most to you is going to help enable your decision going forward. So you have to get organized, you have to start building a plan, you have to start investing, and you absolutely have to start talking about money and making it a part of the conversation. So I just want to apply to all of you for coming today. As we've seen tonight, there are so many reasons why managing your money can feel hard and daunting, but why it's so incredibly important to start talking about it and start taking an action plan. So with that, Orlando, I'm going to hand it back off to you.
Thank you very much, Nancy. A lot of good info, and the time is now because tomorrow never comes. So I'm going to open it up for questions. You really shared a lot, and I'm still thinking about the fact that you said, why not teach about balancing a checkbook versus teaching how to make a bench? That's a really good one. So I'm keeping an eye. I'll unmute you. You can use the raise hand feature. Let me just pull back control here. That way I can see. Give me one sec. Okay, there we go. And I'm just going to share my screen just to show anyone what to look for in terms of where the raise hand feature is. And there we go. Let me share quickly. So any question is entertained, because again, as Nancy mentioned, the key thing is start the conversation, start talking to each other, start talking to friends, family, because the journey never ends in terms of learning more and more about finance. So that's what you'll be looking for on your, whether you're on your phone or your PC. And let me just check to see if we've got any hands raised. Give me one second here. A lot of people are playing shy. We got quite a number of people on the call. A good chunk are, unless they're already starting to get organized, they're probably in the filing cabinets right now, putting the tax documents together. All right.
Yes.
We've got. Right, I'm gonna unmute. Yeah. So let me answer that one. I think you would set yourself up well in starting to establish relationships with professionals. So one, don't discount the value of a relationship with a good advisor or a good accountant. Yes, you can open your bank account online. Yes, you can apply for a credit card online, but having somebody who gets to learn your journey, what you're trying to focus on, and then they'll be able to customize, because simply just calling a 1-800 number and getting somebody different on the phone is a huge difference from actually getting to work with somebody who is able to give you more customized information. So that's one thing I would say, because there's a lot to navigate. There are people who've been in the country for all their lives, and even they benefit from working with somebody or having somebody to help them navigate the fact that it's a changing landscape, changing tax laws. We just had the budget, done recently. So that's my advice. And I'm gonna unmute.
Yeah, so it really will depend, Cardine, on what you're trying to achieve, right? I think that's what Orlando's sharing is everyone's going to have their own unique circumstances, their own preferences. Some people might have their own views on investing. Some people are risk aware. Some people take more risks. Some people, have a goal of preserving their wealth. Some want to grow it and really, really multiply it. Some people simply want to set a plan in motion where they can retire at a certain age. So I think it really does depend on what it is that you're looking to achieve. However, I guess the area of commonality, I would say, is you have to really start investing in the capital markets beyond a low or a liquidity type of a cash instrument. I would say you need exposure to the equity markets. You need exposure to stocks, whether that's in the form of a mutual fund or a separately managed account or some sort of investment vehicle where you hold your own securities. Equity ownership is the way that you can battle inflation. And I say this all the time. Equities will beat bonds. Bonds will beat cash, all while inflation is going to eat away at your purchasing power. So I'll never forget, I had a conversation with my sister-in-law. She was in her early 40s and said she'd never invested in the stock market. And I couldn't believe it. I said, what have you been waiting for? And she said, well, I just wanted to have my money safe in, short-term liquid instruments. And I said, but, doing that is like picking up pennies in front of a bulldozer. You're going to grow rich very slowly, and you're going to take a lot of risk. That was the analogy that I used for her, because I told her you have to start investing in the capital markets, particularly that of stocks. So whether or not you feel confident in doing that yourself, I agree with Orlando. I think there's lots of online options. However, that's not talking with a human being. And a human being sitting down, understanding your personalized circumstances, what's necessary for you, for your family, working with your individual parameters, that's going to be where a person like Orlando or like a financial advisor can really set a plan that's customized for you to maximize whatever goals that you're trying to execute on. So that's where I would say.
Thank you.
If I'll add anything to that as well, I think also if I go back to one of the points I mentioned earlier, which is that we can't really, we don't want to put people in boxes to say based on a certain age stage that everyone will benefit from X sort of information, because two people might be in the same age but at very different sort of stages in life, because one, even if it's a twin, so Nancy mentioned you've got twins, but you may, in a couple of years, maybe one of your twins will be, start a family sooner than the other one. Very different, their life start taking two different sort of trajectory as a result of certain things, even though they're the same age, right? And that alone might mean their needs are going to be different. So I think my view on it is I see people where they're at and then try to help them make incremental improvements in their knowledge, incremental improvements in what they've already done. Because the other thing that we have to focus on is the behavioral part. So helping people to be accountable and be accountable to themselves. And I'm just going to try to make a small improvement, because I think also when we try to, it's too overwhelming to try to fix everything all at once, and that sometimes intimidates people. So, but definitely, I encourage everyone to continue the journey on learning, consuming information in bite-sized pieces, which is, again, testament to everybody who's on this call today, because you are picking up one, two, three different nugget pieces. And hopefully we'll continue the conversation, right? Offline.
I always say, Orlando, you don't have to have all the answers, but you have to know what your next best decision in life is going to be, right? What's the next decision I have to make? And it could be as simple as deciding to work with a financial advisor. And that decision can change the trajectory of your financial success.
Yeah.
Do you think that?
Well, there's the thing you mentioned about your sister-in-law. There's a quote that I have sort of kept. It just stuck with me, which is that in being ultra conservative, the individual might go broke safely.
That's the point. Yeah.
Right. So, and again, that's a testament of time on two ends of the spectrum. So time in the spectrum, the accumulation stages where the compounding effects of very low returns relative to inflation gradually eats away. And likewise, again, on the other end of the spectrum where you're now, pulling on that with longer lifespan. So it is something that when you think about time, if an individual gets engaged with somebody to help them, not at 45, but at 35 or at 30, you got 10 or 15 years now where, yes, that person was overwhelmed and said, you know what, I don't know this enough. I don't even know where to begin or which one to choose. So I'm just going to not do it today. And then that one day becomes a week, becomes a month, becomes 10, 15 years of not doing one because there's that perfection piece where like, if I don't know which one is the best one to choose, I'm not going to choose anything. Versus if they engage with somebody to help them choose, maybe not the best thing out there, but better than cash. And then you keep improving over that journey and working on an individual. We say, okay, let's improve again. Let's improve again. Let's keep moving the needle. And that it results in a huge difference in outcome. So that's sort of my one of my viewpoints on it. And hopefully that helps. I'm taking a look at just time, just to be in the interest of time. I think I see Joseph's hand up. I think it may have been from previous. I don't see any other hand. So let me share something real quickly, which is to say that the next webinar that we will be having is going to be on the 26th. So we're going to be focusing on real estate, interest rates, and also there's a new account, the new first-time home savings account that just launched. It's actually going to be effective in April. A lot of information, even for individuals in the industry, to dissect how this can be used as a strategy for individuals trying to get into the housing market, which has been difficult just with prices being what they are. So welcome to join that one on the 26th. And the call to action, just as Nancy said, is to, one, not be on the sidelines. Feel free to reach out to me. I'm always willing to have a conversation with anyone. And I always say that either I can help you directly or indirectly via the network that of other professionals that I work and keep in sort of my surroundings to assist based on the need. And again, the goal of these webinars is to provide that information, education, empowerment, and more importantly, execution. So the information is good, but we want to make sure that steps are being taken towards improving from where you are today, even if it's just 1 degree, right? And this is the process that I typically work through, just kind of getting a sense of where each individual is at, and then providing some suggestions on where gaps may lie. So with that, I want to thank you, Nancy, for really, a lot of thought-provoking insights, that I think the attendees will benefit from. And I can't thank you enough for, leading us in this conversation. A few days into the remainder of March. I do think it's important to have that focus on the month, but definitely the work continues the remaining 11 months in the year, the other days in the year. It's not just something to sort of, one and done, celebrate and then move on. The celebrate for the month, and then we do the work the remaining months in the year. So the work is on the beginning.
I totally agree. Thanks so much, Orlando. It's been a pleasure. Thanks for having me as your guest speaker today.
You're welcome. Take care. Thank you, Nancy.
Bye-bye.
Okay.